All right, 8:30. It's right about now, so let's kick it off. All right, welcome everybody. It's Monday, April 17th. We got preliminary building permits tomorrow, and that's about the only big economic news we have this week. Hardy, correct me if I'm wrong.
In economic news, that's correct. We have other more localized economic news that may be worthwhile.
Oh, do tell.
I'll wait for the crowd to fill up a bit. The biggest one, let's see. Probably do it in 10 minutes once I'm done writing up this play.
Oh, sounds good. Very excited to hear your plays as always. But yes, good morning everyone. To all of you in the chat, hello, hello. Hope you all had an amazing weekend. Didn't get up to too much shenanigans.
I just got back from the beach.
Oh, very nice.
Oh, it's lovely. But now it's 44 degrees today, so I want to go back.
I wouldn't mind 44 degrees.
It was 80s, and now it's freezing here today.
How are the chickens?
Chickens are fine. They missed me. Maybe we can see if Aegon, since it's cold, if I can get Aegon to come up and pick something this week. What do y'all want him to pick?
Oh, let's ask the listeners. What do you guys want our resident Kramer chicken to pick in terms of stock? Stock go up, stock go down, stock go sideways. Riot, MTB. What else we got? WW. Back. Wow. Okay, you've got a lot of choices to pick from.
Mm-hmm.
PBR, Google versus Microsoft, man. I kind of feel like MTB is the move. Like MTB up or down.
Well, they've already beat earnings. I think that ship sailed this morning already. Maybe something that has earnings tomorrow. Let's see what earnings are for tomorrow. Bank of America is tomorrow before market opens, so that one might be a good one.
I forgot we had Charles Schwab today reporting earnings. I think ACML is just listing out like every single bank.
Goldman Sachs is also tomorrow.
I think this is as large as the audience is going to get. So, earlier today, Bald shared that Google is down largely in pre-market because of a rumor that Samsung will change the default search engine on its devices from Google to Bing. I think I had a peek at Team Blind, and there are others also confirming the rumor. But most importantly, I think the rumor is overblown. And so, in anticipation of the rumor being dismissed and a final end ignored, I'm looking at buying Google April 21 109 calls for $1.65 or less. And I'll put the thesis down in the chat. It's funny because Google earnings are on April 25, so next week. It doesn't matter because the earnings, Google earnings, would have covered up until end of March, and this rumor is in April. So.
I'm confused how you came to the determination that the rumor is likely false.
Team blind. Just search for posts by various Samsung engineers.
I'm just curious, like how big would a decision like this? How many engineers would really even touch that?
Less than 5. But if the rumor's running rampant throughout the company, it's not hard for non-engineers. Excuse me, it's not hard for non-engineers to jump on that rumor as well. Microsoft, incidentally, is also up in pre-market, so it might be worth buying puts against Microsoft as well, for the same reason.
And for the 100 or so people who joined after Hardy was like, "This is as big as the audience is gonna get," we're talking about Samsung potentially changing the default search engine from Google to Bing. So there you have it. Should be in the comments for you. Sorry, I had to rub it in a little bit. I was like, "You really think the audience is gonna top out of like 140, 150?"
I admit I haven't really been here lately, so
It's all good. We've definitely. Oh, go ahead.
I'm gonna update the play with Microsoft in a minute, trying to price out a good option contract. Oh fuck, that's a lot. Yeah, calls on Google might be better than puts on Microsoft, unless you want to come up with like some weird pairs trade. Oof, that's not cheap. I did not see 60 Minutes last night. Were they talking about me again? Unlikely.
Good question. Does it matter what kind of Google Play, if you do it in class A or B or C?
I'm specifically going for Goog because that has higher options volume.
Gotcha, that's C. All right, cool. Thank you.
You can do both. You're absolutely right. Updated the play, posted in the comments. Basically, you can come up with a pairs trade, Google for Microsoft.
Right.
Microsoft April 21, 290 puts, or Google April 21, 109 calls. Too bad there's no way to like pin these things.
Yeah, that would be helpful. But there's no real difference, I guess, between A and C. Or I guess Google and Google.
Within the different share classes, there's no material difference. The reason why I'm looking at Goog Class C is because there are more options contracts traded there, so I don't end up holding the bag.
Oh, I see. Okay, more options. Okay, thanks, Roddy.
Okay. All right. Thank you for highlighting spiritual. So, somebody paid 60 Minutes for a pump piece or a puff piece on Google's Bard. Yeah, a lot of fluff. Incidentally, I stood up AutoGPT on one of my servers, and I named it Rita, which stands for Resourceful Intelligent Technology Assistant. And Rita knows how to Google and do research for me. I'm limited to 10,000 searches a month, but still quite good.
So Friday I bought a DWAC put for $1 and it's already doubled.
Well done. Nothing specific on SPY, if anyone's asking. I wouldn't look until SPY puts unless the price goes to 420. That's assuming Gamma Max stays at 420. But broadly speaking, I wouldn't look at SPY plays until it reacts off of Gamma Max.
Anybody looking on long plays for Verizon in terms of puts?
How long you talking?
Kind of like a year out. I was told by somebody earlier this year that it would probably be crashing sometime later this year. So I've been looking on like a $30 put. It's been going down, but
yeah, I'd probably
recently
wait for the price to
Verizon
come
hasn't been
back
going
up
so
to
good.
like 40 or 40.50 before looking at puts.
Gotcha.
Not to interrupt, but T minus 39 minutes for the Starship orbital test flight launch. In case anyone wants to watch, it should be pretty spectacular. Usually, Tesla stock is influenced by the success of the different SpaceX launches. So if everything goes as planned, it should boost Tesla stock a little bit. Incidentally, Elon held a Twitter Spaces last night, and he said they're not expecting success. He said the most likely outcome is failure, which is what they expect, and they're doing it mainly as a data gathering mission and to test the launching capability of both the Super Heavy booster and the Starship.
Out of curiosity, how's real estate in the Boca Chica area?
That's a good question.
Because you've got the noise pollution from what I assume will be all the rocket launches and landings. But at the same time, a lot of the engineers who work at SpaceX likely would be buying houses there, or at least employees.
Well, I don't think like in the future, I'm not sure if the launches are going to be happening from there, from Cape Canaveral. I think these test launches they're going from Boca Chica because they don't want to risk the other launch facilities at Cape Canaveral. But I don't think long term they're going to be launching all of them from there.
So long term for Boca Chica, the plan was to have the rockets launch offshore and then return onshore.
Oh, I didn't
That
know
may
that.
have changed. That may have changed in recent time, but at least as of I want to say like 2022, early 2022, that was when Musk shared his vision for Boca Chica.
How often are they launching rockets?
They scrubbed the launch again? It was supposed to launch this morning.
Well, I guess there's not a lot of noise pollution from rocket launches there if they keep scrubbing the lawn.
Scrubbed. I'm still showing T minus 36 minutes to launch. I'm watching it live.
Entirely possible, Trash Panda. So what is the play? Iron Condors on Tesla? On Tesla? I guess while we're waiting, I'll also put the Wrinkle Brain plays up. Oh, Thunderous, you missed it. Samsung is rumored to be switching switching their default search engine from Google to Bing.
Oh, that could make things interesting.
I think it's a rumor, and I think the rumor it's you sell the news, as it were. So calls on Google, was it 109 calls or whatever I put for $1.65 or less, firing this Friday in anticipation of the rumor being shot down.
Yeah, that would be interesting to see them trying to change the search engine to Bing when they're using Android OS, which is owned by Google.
Someone asking to figure out who was short on an interest and how much. The short answer is it's very hard to know because there are plenty of techniques to hide a short position while still staying compliant. Bumblebee asking about Bank of America, Tesla, Walmart, what's LMT, Lockheed Martin, and Ally? Okay, let's have a look. So Bank of America has earnings on the 18th in the morning. So BAC. So April 21 Strangle would currently cost you $1.30, let's say. So you think the price is going to go up or down more than roughly $3 on earnings. That's what it takes for Bank of America Strangle to break even. And keep in mind, IV is 44% right now for that expiration. And prior to the announcement for earnings, it was like in the low 20s. So let's call it 20 points of Vega. Vega right now is 1 cent on either side, so let's call it 2 cents. 2 cents of Vega by 20 points in implied volatility means you have 40 cents of Vega that you need to overcome in IV crush, and the value of the contract is already $1.30. So if you think the price will move lower than like 28 or higher than 32, then go ahead and play Bank of America Strangle. Let's see. What was the other one on your list? Tesla. Okay. So Tesla earnings are on April 19, so we look at the April 21 expiration. Here you buy a Tesla Strangle. Let's see, 760. So you need to pay $14 a share for a Tesla Strangle, and you have a potential 20 point or 25 point drop in implied volatility. So Vega is 8 cents. So 1 point. Really? So Vega is 16 cents against the 20 points of implied volatility you expect to crush. So that's what, $3.20 against the $14 of premium in crush plus theta. So you need the price to move beyond $14 in order for your strangle to make money. And then rinse and repeat Bumblebee for the other place, for the other tickers. Eager Beaver, I do not put a limit order at the target price until maybe 5 minutes after market open. What I'm looking for, or what I'm looking to avoid, are situations where the price gapped farther than I expected it to gap. And in those situations, I typically stand aside and look for another play. We are doing nothing, Employment Several. What are you doing? You're welcome to short Netflix. I do want to point out, however, that Netflix is right between Gamma Max and Delta Neutral. So it's sort of like in the middle of an ice rink with no skates.
Hey, Hardy,
What's up,
if you
Kitty?
got a minute, I got one I was kind of wanting to just run by you. In pre-market, WWE right now is at 106 a share, which is supposed to be its acquisition price. From what I'm seeing, the cost to borrow is 0.83%. Other than being concerned of the dividend payout, which is not going to be, the next ex-dividend date isn't announced, or the deal somehow changing and the acquisition price shooting up past 106, is there any other risks of direct shorting it?
No. You'd probably want to head, well, it might be to your advantage, Titty, to buy the shares and then sell a deep in the money call, because IV on WWE looks elevated.
Okay.
Instead of shorting. That way you have the premium. The difference between, you basically have the extrinsic value in the option, from the option, and I believe that's greater than the cost to borrow. So you're effectively making money on that trade.
Gotcha.
Or highlight that. You start the trade in profit.
Yep, I gotcha. I'll have to take a look at that, see what the price is at open and what the in-the-money contracts are selling for. Thank you, Hardy. And I do kind of like that also. Still gives you some downside protection.
Well,
the reason I
depends
was looking
on
at...
the amount of extrinsic value. That's all.
Okay. Yeah, I'll take a look at those once the option chain updates. The reason I was looking at direct shorting it is it has been, like, just in the past few days, it's gone all the way down to like $100 or lower. Like, it's just kind of flopping around. So with it being that high right now, and there's still not a date set for the acquisition. But no, I do like just buying the shares and selling the in the monies. I'll take a look at that. Thank you.
901. It's WWE Whiskey Whiskey Echo. It's possible, Z's, but you have to consider the amount of delinquencies or late payments or chargebacks or anything that would negatively affect the increased card volume. Let me see if I can find it. So this is the new, I put down in the chat a link for new issue volume from all the major card companies. What's interesting is that Amex issued $6 billion in credit card loans, basically, or lines of credit that are being taken up by the ABS market or asset-backed securities market. So same concept as mortgage-backed securities, but in this case, it's credit card.
It's at a higher interest rate.
Correct. That higher interest rate makes up for the increased default risk. Because agency mortgage-backed securities, for example, have zero default risk. They're guaranteed by the government. All you have to worry about is prepayment risk, not receiving your future interest payments.
So it's a mortgage-backed security. If there's a foreclosure on the home, is there any value salvaged from that when the home gets taken back by the bank, or is that still just considered a loss?
Well, the amount that's not covered by the sale of the home in foreclosure is what's charged back as a default or a prepayment, technically. But in the case specifically of agency mortgage-backed securities, the stuff guaranteed by Fannie Mae and Freddie Mac, even when the home goes in foreclosure, the difference is paid out to the mortgage holder.
Because basically, for credit card backed security, you're not going to have any assets to be able to get back, correct?
Correct, and that's why the interest rate reflects that combined default and prepayment risk. What's interesting is that in the last 12 months, Amex issued $6 billion worth of credit. Discover issued $5.6 billion, and it goes down from there. I think Stonk Chaser needs to elaborate on their thesis. If not Schwab, then whom? And why not Schwab? Papa Ultimate, why do you suspect a beat for SoFi at earnings? Yeah, Stock Chaser, that's very thin due diligence. I could just easily say apes can fail. What specifically about Schwab do you not appreciate or is driving you to buy puts against them? All right, what other plays do we have?
Just would like to let all the 390 people who are just listening right now know you're more than welcome to raise your hand, talk, and give us your play, unless you're really enjoying the investing ASMR that Hardy's giving us.
All I have is GME shorts and Weight Watchers shorts. Some expire on the 21st and some expire. My GME expires on the 12th of May.
What happened to Roblox? Ah, their March
Roblox?
metrics came out. So their monthly average users probably went down.
Is Minecraft is a little better than Roblox, right? But Roblox is kind of like the online, like fucking, I don't know, free browser-based one, and then isn't Minecraft like a little bit more, I don't know, in depth? Takes more memory and stuff. You have to actually download it and install it.
No idea. All I know is Roblox is down 30% pre-market.
Hey guys.
Yeah, I would short Roblox. I would not short Minecraft.
Why would you do that? They're already down.
Down by how much? I mean, how much more is there? Is there
They
left?
went from 45 to 40 in pre-market. And that represents the price 3 months ago or 2 months ago?
Yeah.
So how much further do you expect them to fall?
No, let me look. Let me look at the chart. Give me a minute.
This might be a situation where you buy the dip on the
Very-
hope that,
yeah, very well
that
could
it
be.
goes up a little bit and then you sell before the next dip occurs.
Newbie question: just how much of the user base is actually just like kids with phones?
Yeah, I mean, Roblox was at 26 in December, dude. Like, it's in the middle of a pullback. It was at 45. It's at 40. I mean, it
So
could
what
easily get
caused the
back down to
pullback?
38, 35. Easily.
Okay. Intraday?
Intraday? I mean, fuck intraday. I mean, I'm not a day trader. I don't know. I mean, obviously, dude, it's down 11% on the week, 12% pre-market. I guess you could do a little call, and it should pump. Should
Dead cat bounce, maybe. Hold on, let me
Huh?
check. I need to see
Yeah.
what the IV of Roblox is after market opens.
Yeah. Definitely get a little intraday play off of.
Because the April 21 IV is still lower than all the other expirations. So that may be to our advantage.
Yeah, I can see that. That's nice. What about fucking 21st?
Alright, thank you, on tackle. So it may be a worthwhile bounce off of Delta Neutral.
Damn, dude. 6 cents for the fucking calls. They're expensive as shit. For
Well, market
$40
hasn't
stock.
opened yet. You're probably looking at the where are you seeing 6 cents for Roblox $40 calls?
It's because I'm looking at the 21st. April 21st, $40 call, 6 cents or $6.05.
That makes more sense.
Yeah, it's about $6.
Do you guys play Roblox?
This is a big difference.
Because there's really no comparison between Roblox and Minecraft, in my opinion.
If we may ask, what are your demographics? Are you like a 20s gamer versus like a teenage gamer?
So
Isn't it anyway?
I have children that play Roblox and Minecraft extensively. Roblox has mods, so like Minecraft has one mode, right? You have like cows and chickens and stuff like that, but Roblox, they encourage you to build your own maps and your own games. So it's really like the graphics aren't that impressive, but they really go way beyond in terms of modality.
Can't you be like
Okay.
Grand Theft Auto in Minecraft, basically?
Yeah, but I think it's most of it is free on Roblox, right? Doesn't Minecraft have more income streams?
Well, so for Roblox, they like you might build into your game that you have to pay for certain features, and so Roblox then requires you to buy Robux, and when you buy Robux, they take a portion of that.
Yeah, a small percentage. That makes sense.
All right. So we'll keep an eye on Roblox. See, maybe $42 calls.
For what date? 21st?
21st. Basically, I'm
pretty-
expecting some form of dead cat bounce that I hope to be out of before market close today.
Yeah, for sure. 42 for 420. Let's go. Oh my God, $13 in theta. Fucking A. Can't do it, bro. Good luck with that.
Eager Beaver, the Google degenerate gambling play is today. So basically, I'm anticipating between now and Friday that the rumor of Samsung switching to Bing gets crushed. Because, sell the news.
Yeah, Google's still pretty cheap though. Wasn't it just at like 140 a couple months ago?
Well, a couple months ago, they didn't announce Bard.
Yeah, news doesn't mean shit, dude. The news cycle will pump a stock for like maybe 2 or 3 days, and
It's not about the news in this case. It's about Google's ability to maintain the most relevant answers for people searching. The fact that GPT-4 is quite capable in answering correctly is already impressive in its own right. Admittedly,
Yeah,
I haven't had to Google. I haven't had to search for programming snippets on Stack Overflow. I just use GPT-4 when I'm writing code.
Yeah, it's a very small niche that actually uses GPT-4, right? Can you even still get it? Didn't they make it so you can't get it anymore?
You can't get it.
You can use it, or
Yeah,
you can.
I have direct access to their API.
Oh, okay, nice.
You can sign up for that, and if anyone else would like direct access to the API, let me know, and I'm happy to resell it to you at cost.
Mm-hmm. That's a small percentage of the population that's using that, though. Most people are just going to use Google.
You'd say that, but consider how many active users there are for ChatGPT Plus.
I don't know how many there are.
Estimated at 250,000.
Wow, 250,000. 0.1% of the population.
You're missing the point. How long did it take for Google to get 250,000 paying customers?
I don't know.
Longer. There's no way they got 250,000 paying customers within 2 weeks.
No, I would agree with that.
So in that same vein, a lot of Google's bread and butter, 80% of their search queries, to my knowledge, are the same. That is to say, day over day, the same 80% of things that Google has in its index are being asked by the various searchers.
Mm-hmm.
Which implies that the knowledge that people are seeking on Google is fixed or otherwise known. And therefore, you don't really need the various search results. If you get something that spits out the answer, you're set, you're golden. You don't really need to go click another link to get onto the website with the answer. And I think that's the advantage of GPT-4. Bonus, you don't need to understand how to Google it or what specific kind of keywords or format to use. You ask quite literally in natural language. So
Mhm.
the fact that Google doesn't have that kind of technology for themselves really does impact the exclusivity that their search engine used to enjoy.
Got it. Got
know,
it.
It's funny you say that, Coco. I use GPT-4 to write the prompt for Midjourney.
Well, can't Google just use it too? So like, why wouldn't they just adopt it?
Because they would have to pay, what's it, 3 cents per 1,000 tokens, basically the same price that anyone else pays.
Yeah.
So where's their margin?
Well, why don't they just reverse engineer it? It's just
You
code,
think
isn't
they...
it?
No. What makes GPT-4 much better than Bard is OpenAI's development of tagging and a tagging infrastructure to basically identify, here's a prompt, here is an example of a good response. So it's not quite, it's the training of the code that is novel, and that's where OpenAI's advantage is over Google.
So if it's a technique of how the computer is reading the code, why
It
can't
has
that
nothing to do
technique
with
be
code.
adopted?
It's the data that's used to train the model.
Right. So how is that? I just don't understand how is that something that Google can't do and reverse engineer?
The
I mean, is
process
it
is
something they
known.
can reverse
I mean, the
engineer?
process is
Problem-
known. The papers are all public. The issue is like you just need to actually train it, and you need to run it. And
You need the
just-
workforce to do the tagging.
And then a lot of it is you need a bunch of people just to do grunt work to classify your data, and that just takes an enormous amount of time. And then you actually need to do a bunch of linear algebra and probability nonsense to throw it into the machine and let it
Right.
calculate your various coefficients. And that also just takes an enormous amount of time. So it's not
All things that Google has.
Google, as
Not
powerful as it
exactly.
is, can't break physics.
The
What?
other
Can't break
issue,
physics. So it's like
put it this
you
way,
only
bro, what are you
you only
talking
have
about?
so many T-flops.
If OpenAI can do it, why can't Google do it? That's my only
because
point. I just
OpenAI
don't
had
see how.
4 years to do it. So
It
Google
has
needs to
first mover
somehow do
advantage.
4 years of work in 3 months, or whatever the
But it
catch-up
exists.
rate is.
It
Yeah,
has
I
the
understand
first
that it's a
mover
very
advantage.
difficult thing to do. But
Like
my
the
point is,
catching
now
up will
that it
take less
exists,
than 4 years, but the market moves really quickly. So in that catch-up time, the technological frontier is simultaneously moving outwards.
so
First
basically,
mover
it's
advantage
just
is
going to move. So since OpenAI did it first, you're just saying that the technology is going to move too quick for Google to reverse engineer and make any money off of it. By the time they try to do that, all the profit
first
margin will be
mover
Let's
gone.
say
advantage.
let's say it
That's
takes
just
Google 3 months to produce something similar, right?
Yeah.
In that same 3-month period, OpenAI is also moving forward. So Google would take 3 months to match what OpenAI may have been capable of doing 3 months ago. It's
Right. And
unclear
you're
how
saying
quickly they
instead
can
of
Yeah, so
continue to close that gap.
yeah, so it's like why does and then at the same time like OpenAI is creating its own ecosystem that's specifically developed towards OpenAI. It's like every CS major takes an operating systems class, but there's really only one large PC. There are only two large PCOS publishers, and that's mainly just because once you have a first mover advantage, you accumulate a lot of technological capital that's just difficult to dislodge, and then at the same time you create that ecosystem, and that's even more difficult to replicate. And so if you're the technological laggard trying to catch up to that frontier, it's just much more difficult to do that.
Yeah, that makes
Not
sense. I see what you're saying. Like,
it's not
I get
impossible.
it. By the time, yeah, you're saying just by the time like Google would be able to like the amount of users would just be too many. They'd lose too much market share. I get
I
it.
mean,
Here's
it's
the
not
other
impossible. Like
possibility.
if you're working biz dev at Google, you're probably just going to offer like Bard for free and more testing it and just spend ginormous amounts of money poaching people from OpenAI and whatnot. It's not impossible hill to climb. It's just a very difficult one, and it's one that's very uncertain.
Here's an opportunity for Google. The current limitation in any LLM or large language model is that the entire model needs to fit onto the graphics card or the TPU that's running the analysis or executing the model, generating a response. So if Google can figure out a way to distribute an LLM across multiple GPUs, the size of that model and the theoretical speed with which it can accomplish certain tasks suddenly will eclipse OpenAI.
Yeah, parallel computing and pipelining are such trips.
Correct, but using today's best practice for parallel computing doesn't work when you're trying to parallelize across multiple GPUs.
So like so in this case you're just taking a brute force. You can probably find like improvements in efficiency and like comp arc and
Well,
networking
part of the
and IC.
trouble is you have, 175 billion parameters in GPT-4's model? You're not using all 175 parameters when you're doing any input with each query. You're using, let's call it 1 million. So if you can if you could break it into 175 1 million parameter models and then change the distribution such that model A has 10 instances while model double Z has only 1 instance for more obscure knowledge, that may be a worthwhile way to parallelize it. Now, of course, I'm talking very broadly, but I imagine there's a lot of research in that direction to expand the capability of natural language LLMs.
Well, yeah, unambiguously. But yes, it's unambiguous. It's like if you I see like the ICLR and the ICML conferences tend to have a lot of stuff on just like reducing the recurrence function just a little bit. So obviously,
just responding to the chat quickly, no gains without risks. Microsoft, incidentally enough, is one of the most underutilized enterprise cloud providers out there.
Yeah, but Azure sucks.
There's the cost. The point is the cost of their spot pricing for Azure servers, basically bare metal servers, is about 60% the cost of AWS or Google. So for my specific use case, I have a lot of like point compute that needs to be done, but only certain times during the day. So I'll spin up Kubernetes nodes on top of Azure, some combination of Azure, GCP, or AWS, based on whichever one is cheapest, net of anticipated data migration costs and compute needed. In the last month or so, AWS has won most of the jobs just because their spot pricing is cheaper.
Nice. But
so multi-cloud, for those of you in the tech space, multi-cloud truly is today. And the fact that I'm able to use GPT-4 to write my multi-cloud shit, huge improvement.
So essentially, if you want to bet that Microsoft can create a functioning Azure,
no gains. Azure Spot, that is to say the preemptible servers, are 60% of the price of Google equivalent preemptible servers or AWS equivalent preemptible servers. Google and AWS are pretty much close to par.
I'm just
Sorry,
talking about
ECE, I'm just responding to the chat.
Not really the spot ones, but the ones where you just buy long-term contracts and.
Oh no, I don't do reserved instances because like my compute requirements are very lumpy.
Oh, okay. I guess I'm on a different side, but like on that side, Azure, I've heard of both ways. It's like complete crap on that side. So it's like everyone.
The software on top of the hardware is crap. I completely agree, and that's why I try to get as close to bare metal as I can.
Yeah. So essentially it's like if you want to take the risk on Microsoft, you can basically buy long MSFT and just basically take massive bets on whether they can fix their Azure program. I mean, I think they will, just because it's like Microsoft's just been churning out really good products recently.
Part of the trouble is Microsoft really wants you to stay within their ecosystems. That basically means learning C# or .NET versus using more open source languages. Think Python or PHP.
I mean, the syntaxes are largely the same, so it doesn't really matter.
Yes, but the paradigm, like the way you have to think about the object model, is very different between those two.
That's fair.
Like I can write better Python than I can write .NET. That makes sense?
It does. Although Python is cheating. So it's like just import all the libraries you need and you're just like.
You could say the same for Java or Kotlin.
Java, fair. I got my. I never actually learned sorting and searching in college. I would just always call arrays that sort and be done. Just take the points off and be done with it.
Anyway, just going back to the chat. Does Masterify, the way Sparks of AGI works, the easiest way to explain it would be to look at how IBM's Watson was built in order to compete on Jeopardy back in like 2008 or 2007. So take the capability of the technology back then, where all the knowledge was on-prem, and expand it to all the advancements between then and now. It's not surprising how accessible the language model has become since Watson. And if you follow the people who worked on the original Watson for IBM, it's no surprise that a good chunk of them are working at OpenAI. Business Union, I am reasonably self-taught, largely because a lot of the stuff that I use today did not exist when I was in college. So I don't quite stay on the bleeding edge, because, you know, pioneers are the ones with the arrows in their backs, but I'm usually the second or third wave behind them.
Yeah, I mean, I work. I don't think I count as bleeding edge either. I kind of support.
Also, it looks like
We're
SpaceX
transitioning.
Starship
We're
is not
transitioning.
launching today.
It's what we can count on. I guess the best is for transitioning a lot of analytics and financial data over from like really older mainframes to the cloud.
I mean, what's cloud? Cloud is just a larger, more dynamic mainframe.
Yeah, but it's a mainframe, but it's not on your balance sheet. It's a mainframe on someone else's balance sheet.
Oh, of course.
So why do you think Musk hasn't taken SpaceX public?
Because the public requires profits.
You think
And
it's
in
so
order for that,
massively-
because of the research nature of the various spacecraft that SpaceX is developing, the public would very quickly short the stock or otherwise give up their equity and destroy the value, reducing SpaceX's ability to raise capital. And besides, the only reason why Musk would ever IPO SpaceX is because he can't raise more money on the private market from his various investor friends. I've tried to... So I participate in a VC fund, and we've tried to invest in SpaceX at back when it was being valued at $60 billion, and we were rejected, even though we were willing to go to a $70 billion valuation as part of our investment. So it gives you a sense of like the kind of power Musk currently wields in the private equity market. So there's no reason why he should go through all the trouble of the public equity market, especially with all the regulatory overhead and burden, when there's still so much money floating around for the private equity. Does that make sense?
Yeah.
Well, so is it just all private placements and LBOs in like the VC world for exits that aren't IPOs?
I don't think Musk will be able to exit SpaceX without an IPO, but at the very least there are earlier investors in SpaceX who are willing to sell their portions of their equity at the inflated valuation or the current valuation, because for them it represents a massive gain.
Yeah,
and then
like
there's a new wave of private equity investors or accredited investors who are willing to buy at the current valuation in anticipation of further growth. Musk has pointed in the past to using Starlink or spinning off Starlink as its own IPO, but we don't know to what extent that will actually happen.
Yeah, the liquidity management, liquidity issues when you're running super large firms that aren't public are always difficult. Especially one that's like always like SpaceX, these R&D intensive companies, they're basically they're always on the market for capital because they generate very little of their own, or they just burn through it all.
Leonidas, which tests in finance? Because part of the problem with GPT-4 is that you're limited to 32,000 tokens. And if you were to do the most expensive query on GPT-4, it would cost you $4 in credits in order to process a 32,000 token document for summarizing. So I have no doubt that GPT-4 is capable of doing sophisticated finance descriptive work, I have yet to see it perform well when doing any sort of well, let's call it graduate level financial math or financial engineering.
Just curious, do you work in the Valley?
I do not.
Oh.
I'm sure the Valley would love me, but I'm not moving to the West Coast anytime soon. So many needles in San Francisco.
How
And
does
poor.
is ChatGPT a subscription service or how does it charge?
So
Premium.
there is both. There is a subscription service where you pay, I think it's $20 a month for rate limited access, or you can get access to try to access the API and just pay as you go. So that same $20 would probably get me 1,000 times more tokens to work with. The downside, of course, is you have to write your own integration to the API, but there are plenty of open source platforms upon which you can put your API key and then use it like you would the ChatGPT interface. The trouble today is getting access to GPT-4 API. I was fortunate that I was one of the early requesters for access, and I now have access to a solutions engineer who can help me write better prompts.
Just curious, where you based out of?
Bumblebee, New York does have a big homeless problem, but not nearly as big as San Francisco. I'm also in New York, whoever was asking earlier. That's all good and well, CDM Miller. Xenophobia, good to see you here.
Hey, anybody got any plays for today?
Oh, you missed it earlier. So we're buying calls on Google, puts on Microsoft, and then the usual wrinkle brain plays.
Okay. Well, were we just buying puts on Microsoft because
So here's the reason why. No. It's not to sell the news. Let me explain. So for everyone else who joined late, Samsung, there's a rumor going around that Samsung will change the default search engine for their various cellular devices from Google to Bing. Now that's understandably a rumor that's hurting Google and helping Microsoft. The expectation is the news will be different from the rumor, and therefore calls on Microsoft.
So
calls
we
on
know
Google,
that's
puts
a
on
rumor
Microsoft.
then.
Yes.
Okay, I was under the impression that it was a piece of news. That's
There has
actually
not
what's
yet
happening.
been a press release from any of the three companies announcing that partnership.
Gotcha. Cool. Thanks, man. Like I was
So
about
the risk, if you scroll up, you can find the play. The risk is, of course, the rumor actually being true, at which point the price of Google will drop even further. So risk a very small amount of your portfolio for the play on the expectation that the prices will mean revert. No gains without
call
risks.
spreads anyway, so.
No gains without risk. Do I think Martin Shkreli is a good trader? No. How about Victor Niederhofer? Never heard of him.
What about your Roblox dead cat bounce?
We'll see when market opens.
Gonna wait on that one. All right.
Because I don't know if it's gonna continue falling, continue dipping. You know what I mean?
I need something long. I need something to go long on. Everything I have is short. I need to hedge myself now.
So I'm still in my. Yeah. I'm still in Activision. They're supposed to. So I have a bunch of calls for this Friday. I rolled out about a third of my position to May, primarily because there's a risk that even though the report from the UK about the merger show up, it might get delayed or something. So those calls that I have for this Friday are going to be useless. That's why I rolled some of them. That's something to consider. There's a very good chance that it is going to get approved in the UK since both Activision and Microsoft have taken steps to support. Okay, market's open.
GG, brah. All right, let's see where Google is landing. So, yeah, never mind. IV on Google skyrocketed, so I'm going to stand aside on that trade.
Sell some puts.
Not
put
yet.
Spreads. Do a credit put spread.
Oh, the GME put is up. Thank God. Jesus Christ.
Enphase stock up 3%.
Yeah, it looks like Microsoft and Google IV skyrocketed because of the news, so can't do much there. Roblox, let's see how bad it's going.
Tesla's showing some strength.
Roblox should be pretty easy. I mean,
no, I think this is going to stay, so I don't... I'm looking at it now. Not a lot of volume of Roblox.
Yeah, there's not a lot of action, right?
I wouldn't know. No gains
I'm
without
gonna
risk.
get some AMD calls.
AMD?
Yes, I am doing that for a technical reason. It's going to be a small amount. It just crossed below its put wall.
Wait, Sound of the Culture. Google 110's expiring this Friday? Okay. Congrats on the fill.
All right, let's wait and buy some.
That's impressive if you got them for 10 cents. They're currently trading for 30s. Oh, 24 cents, excuse me. Still. You made 50% on your trade, so congratulations.
I don't know. Perfect, guys. It looks like NASDAQ is topping for the week. That looks like a fat top.
But I bought those AMDs. Let's see how much money I'm gonna lose.
All right, the Gen Gambling play is up on half on a double if anyone wants to go over that. I really should change the casino picture. Hold on. What do I have here?
There you go. Big calls coming in on Lulu. They have earnings this week, do they?
Yeah, the fact that there's low volume legit tells me that the market's agreeing with the current valuation. That's what makes me really nervous about buying the bounce.
Get some Lulu calls. 380 for the week. Fuck it, $1. Let's offer $1. Moved up too quick.
Definitely the bear market. So, everybody sucked, and then the market goes sideways for a week. Drops.
I don't think the market's going sideways for a week. We're gonna probably oscillate between 4,100 and 4,500 SPX. We're not gonna break 4,200 SPX before OPEX, I think.
Oh, okay. And then what after that? Do you think it's still going to continue like 45, 48, like continue going up? Or what do you think?
I don't know, man. Like the next big data point that's gonna come out is FOMC, right? It depends how exuberant the market's gonna get. If it's gonna price in a pause or a rate cut, or what's it pricing in. So it's all going to depend after that. I'm probably getting out of longs and going away at the end of this month.
Gotcha.
Like, that's my plan. I'm not gonna worry about shorting the market or anything. I am just gonna get out of longs and just sit and see what happens. Maybe come back towards the end of September. Just take the summer off.
No, that makes sense. I mean, I'm a little less bullish than you, but I kind of think the same thing. I mean, the CPI was lower, right, than expected at 5%, and the market didn't do much. I mean, there was a little bump last week. It ran up a little bit last week, barely could hold it until Friday, and then obviously the end of Friday it started dropping off, and today it's struggling. So it's sideways basically.
So just like paper, the sell in May and go away thing. The reason why that exists is because of the Black Monday crash in the 1980s. If you remove that crash from the data, If you
Oh, I
remove
thought
that
it was
crash from
because
the data, the whole sell and may go away thing suddenly becomes invalid. So basically,
I thought it was
it's
a tax
caused.
thing.
No, it's not a tax thing. It's caused by an extreme market event, which shifted the average down.
It's just
Okay,
yeah, data
so
point. Yeah.
okay, that's fair. But I've done the analysis since 2000. I posted on Twitter because Andy Constant and I were going back and forth about that. So, and I can just let me pull it up because I don't want to misrepresent the findings.
And I'm sure you can find a ton of examples where the market has gone up in May too, right?
Yeah, no, there are plenty of examples where that has happened. But the thing is, there is a statistical difference between May and April, and the average returns in May are like closer to being flat than they are in April. There's no statistical difference between any of the other months except May and September. September has traditionally been pretty bad.
How does that feature when you're in an election year?
I haven't split that up. I couldn't speak towards that.
Because someone did the analysis a while ago. Oh, congrats whoever bought the Google 110 calls. You should be printing now.
Well, my AMDs are printing.
Google is sweet.
And Lulu's, I got them for.
So the idea is that
Yeah, go ahead.
on a mid-cycle, markets on average go up 11%. And I think a lot of that is buoyed by all the hopium that candidates push onto their voter bases. And then in a presidential cycle, that effect is increased because of the additional hopium. So 15% average. The problem is that the confidence interval is on the order of 6 points. So market could be up 20%, it could be up only 9%.
Right, but it's positive. Right.
Correct.
So, all right.
It's the inter years, so the years where there
Yeah.
isn't a midterm election or a presidential election,
Right.
where the
So the
markets
upper
tend
years,
to go down.
I feel you, man. I think that's a good thing. I could look into that later today after market closes. So Google is getting a bunch of call buying. BTU is getting call buying. Copper, FCX, Freeport, McRoran's getting a bunch of call buying, and a bunch of them came in on XOP. I have live data. That's why I can tell you that. Looks like healthcare is trying to do something.
Healthcare.
Healthcare is always trying to do something, but usually it's the administrators, especially for like things
Healthcare.
like medical coding.
What about
Healthcare
healthcare technologies?
hasn't-
EE healthcare.
My problem
The
with
time to
health
get
tech
in-
as an industry is it's so mired by regulation. Sorry, was it Diamond Headed who had something to say?
I was just gonna say healthcare was the time to get on the healthcare was like fucking 2013, 2014, right before fucking Obamacare and shit, 2012. Like that was the time to get in on healthcare. I had some healthcare stocks that I got like 300% over a year or something like that, or 2 years back in like 14, 15. Now healthcare's, I mean, unless you're going after some little tiny biotech company that you think's gonna, boom and get, 2,000% out of, you're not gonna make a lot of money in healthcare. It's kind of more of a cyclical market, right? Money kind of flows into it.
I agree with the current switch to chips in ultrasound machines. I mean, they're going to be able to mass produce it as long as the semiconductor industry doesn't like tank.
Yeah, I don't know. Healthcare is just not exciting to me. That's all I'm saying.
Fair.
And I think it's hard for the smaller companies to build something and have massive growth opportunities, because healthcare is one of those things where big money kind of reigns supreme, How likely is it that some kid in his garage is going to find a cure to cancer, right? Where
Well,
some kid in his garage,
Lizzie Holmes came, right?
Yeah. Yeah, bro. Let's cherry pick it. Let's go. Fuck it. Cherry pick it over. I'm just talking
Wall
about
Street
on mass.
regard war over the Taiwanese mainland unlikely, mainly because in order for any sort of invasion to happen of Taiwan, there are only two beaches which are capable of receiving that invasion force, and they've been very heavily defended as a result. Somehow,
Yeah.
in order for any country to invade Taiwan, they really need very heavy airlift capacity in order to get enough material onto the island in order to establish a beachhead.
Mm-hmm.
So, plausible, yes. Likely, no. And I don't know China's battleship capability to use their stock it to you. The Microsoft put play is already passed, just as a heads up. Same for Google. Unfortunately for me, the IV shot up too high to make the degenerate gambling play worthwhile, because now IV is higher than average, which means it's more likely to decrease. So of the three levers, time, volatility, and price, I now only have one lever in my favor. Does that make sense?
Makes sense.
Howdy, quick question. What about buying a cash covered put on Google?
You can if you want. I mean, owning Google at, let's see, what's a good return? Is there a specific contract you were looking at?
I was thinking of buying $100 put with.
You mean selling the $100 put?
What was that?
Did you mean selling the $100 put?
I'm sorry, yeah, selling the $100 put probably a month out, at about $2.50.
A month out, so May 5, $100 put. So current price for the $100 puts 170, 174. So let's put 172 in premium. Strike at the 100. Days to expiration is 18. Really? Oh, because it's. All right, let's move that out to May 19. That's closer to a month out. So 32. $100 puts 226. So you have an annualized return of 28% on that trade.
Right. But
if it's worth it to you, go for it.
Okay, gotcha. Thanks, man.
The way I've been doing cash secured puts lately is I'm basically selling weeklies on GameStop. Right now I have 2150s that I sold for, I think it was like 22 cents. So if we were to do the April 28th expiration on GameStop, sell the 2150s for 48 cents. Let's see. 48 cents, 21.15 collateral, expiring 11 days. That has an annualized return of 105%. So, you know, that juice is more worth the squeeze than cash secured puts on Google, just by comparison.
Hadi, real quick. So you have been analyzing the returns, but those are not really feasible, right? I mean, you cannot really get the same return every month you write the call, unless you're like so much in the money by writing covered calls that you're practically running on free money.
It's a hypothetical maximum. You're absolutely right. I also want to say that year to date, strictly on the collateral I've used for the GameStop cash secured puts, I'm up 26%. So I don't think I'm going to hit the 200, but my probability of how do I put this? The realized return versus the theoretical return is about the same. So let's call it 25%. So that implies if the Google annualized return is, I think it was 18% or whatever the number was prior, the most I could ever make if it was a perfect cash secured put every time is 18%. Whereas with GameStop, the most I could ever possibly make, assuming a perfect cash secured put every time, is 105%. So I have the logic's slightly backwards, but I am more likely to have a higher return doing cash secured puts on GameStop in the current environment versus cash secured puts on Google for now.
Got it. Thank you for your inputs, man. I appreciate it.
Yep. Stripper, I'm targeting at least 100% annualized returns on the cash secured put, but that is risk adjusted. So based on the risk I'm willing to tolerate for a given ticker. Take, for example, GameStop. If you take cash on hand, I believe it comes out to like $4.90 a share. And that's for all shares outstanding. So I'm willing to sell enough premium so that the value of the GameStop shares that I own is $5 a share or less. And if I go too far below $5 a share, I'll buy more shares to bring my average back up to $5 a share. So that way, in the event GameStop goes to zero, the cash and other the cash position basically comes out to $4.90 a share or something like that, which basically means I don't lose money on that collateral. The advantage also is I can use those shares as collateral for loans. So any shares not covered by a cash secured put, I can borrow against, use that to make investments elsewhere. And ultimately, that's the name of the game. In this case, acquiring as many shares as possible to use as collateral, so I can buy, borrow, die. There will eventually come a time where, what's it called? Where this trade will be ineffective, at which point I'll liquidate my shares and move the money somewhere else. You have to understand, Zima, that the collateral that I hold in GameStop is a subset of my overall portfolio and assets. And I have like so many different irons in the fire growing the assets that I control against which I can use as collateral for loans. So as a quick example, I could use, let's say, 50% of my GameStop position to buy a website that's throwing off 10% a year in cash, or maybe 15% a year in cash. So then I can grow the website. I can grow that website so that it's throwing off, let's say, twice as much cash as it used to, and then sell the future cash flow for the same multiple. So using some actual numbers, I buy a website that's earning $1,000 a month. Typical multiple is 30 months. So I'll spend 30 grand to buy that $1,000 a month website. I'll increase the value of the website by getting the revenue up to $2,000 a month. And then I can sell that same website for $60,000, maybe 6 months down the road. So it gives you a sense of how I can use the borrowed cash and leverage it even further.
6 months to double revenue. That's ambitious.
Not really.
But
I have connections in the ad space. So the CPM, the
gotcha.
RPMs that I'm able to get, easily 30-40% higher than what most people are able to get. And add to that the more aggressive ads placement or different ad types, video versus display, for example. It's not particularly difficult to get provable double income. Now, of course, if the website is affiliate based, that's very hard to do, like, because they're closer to the money. But for those who build really good websites but only monetize using like AdSense or OpenX, I can usually beat it.
Gotcha. No, if you know anything about the advertising space, what's your opinion on deepfakes being used for advertising and endorsements and all of that? You think there's going to be legislation related to that, or like
Yeah,
how's that
good
going to
luck
play out?
enforcing it. The way I see
Right?
it, incidentally, I've been using deepfakes in some ads right now as an experiment. People like when people who look like them
Right.
encourage something. So it's a lot easier actually to make a pretty black dude advertising to black people, or a pretty Asian dude advertising to Asian people, or I don't know. The idea is that you make someone who looks like the target
Mhm.
audience, achieve something that the target audience
Aspirational.
wants for themselves. It's not about
Right.
aspiration. So it's much more simple than that. Suppose, for example, someone wants a better smile. They see someone who looks like them, whose smile went from shit to amazing. And suddenly, hey, if they could do it, I bet I could do it too.
Well, that's aspirational again, right? I mean, it's still
Maybe
aspirational.
we're
I mean,
using,
most
maybe we have different
advertising is
definitions.
either it's sex or it's aspiration. That's what you or fear. Those three things. That's what you sell in advertising.
Fair.
But no, I've been thinking, man. Like, I could put these meme powers to good use and create something for myself. But it's the ethics of it are kind of what I'm struggling with.
Admittedly, you're right, but I don't make enough money for ethics to matter yet.
No, see, the thing is, when you make that much money, ethics are so eroded away that it doesn't matter anymore either. So, right. But anyways, market, not this.
Zima, you have no idea how effective that is at convincing certain audiences to do what I want them to do. And the reality of the matter is, now that I have AutoGPT doing some like very simple stuff for me or low value tasks for me, I can focus more on the high value shit. Which basically means I can accelerate even faster.
Bosco is showing good strength today.
If you want to see some of these handsome men, go to pornpen.ai and then select the clothed filters. Seriously. There's already a community of people dedicated to making how do I put this? Making images of people that are desirable to look at. So it's just a matter of using those images and using those images and then using something like ControlNet to animate their limbs or their faces so that they talk. How do I know what exciting pressure? What specifically are you asking? And for what it's worth, I prefer the blacklist. The way Raymond Reddington is able to stay 2 steps ahead of everyone else is impressive.
I love that show.
I mean, admittedly, after what's it been now, 10 years, it's a little tired, but they always manage to find a new way to outsmart the audience.
Yeah, I think I stopped once they did the COVID version.
Yeah, I don't care for Liz myself, but it was all about Red anyway. Anyway. So yeah, easy repository of pretty people, go to pornpen.ai. Publicly listed advertising agencies are often bound by what's called brand safety and at the whim of their boomer clients. So I often can run circles around them with my own efforts, but to be fair, my own efforts are not nationwide. And they're almost exclusively digital. I don't do things like billboards or TV or linear TV. Also, using GPT-4 to explain to you how to market shit on the internet, very helpful. Part of the trouble now is that digital businesses are likely going down. ENPA is trading so high because there are more buyers than sellers.
Helpful.
You ask a stupid question, you get a stupid answer.
Stocks just follow a random walk pattern in the short run. And you just leave it at that.
ENPH specifically, interestingly enough, is at gamma max. So they just blew through gamma max, which means something materially changed. That, like some news came out that materially changed the valuation of the business.
I think they got price upgrade. Is what I'm looking at right now.
Yeah, those are like 2-3 days ago. So what else changed?
I just saw it today.
Like the first company was HSBC, who set a 271 price target on them. Why did Bed Bath & Beyond spike? Same reason, more buyers and sellers. Although frankly, for me, that's a bit of a toxic dump, mainly because of all the dilution that's supposed to happen. My opinion.
Markets are trading.
Wells Fargo is... see what's happening with them. Yeah, no idea what's going on with Wells Fargo. The only real news seems to be that their price targets are shifting. But I suspect this movement on Wells Fargo invalidated my thesis. Yep, they blew through gamma max. So they're at 40.27.
If I may ask.
Actually, they didn't blow through it. Actually, but they went up. So gamma max from Friday on Wells Fargo is $40.13. They're currently at 40.26. So there's a chance that gamma max they'll be right at gamma max at close today, which in turn means that they'll be ripe for buying puts for tomorrow's trading. And to explain briefly for everyone in the audience, gamma max is the price where a hypothetical portfolio made up of the entire option open interest for a single ticker has the highest portfolio level gamma. The reason why this is important is institutions who are often short options manage their gamma risk and exposure, and sometimes it's cheaper to manipulate the price versus just buy more hedging to protect against a gamma ramp. Now, to be fair, this is not the case all the time, but this is the most plausible explanation for the phenomenon against which I trade.
So what variable does gamma represent, price?
The second order derivative of the sensitivity of an option contract to the underlying price. So it's basically the derivative of delta.
Gotcha.
Or the speed with which delta changes.
Right, it's change of rate, yeah. Or rate of change. The fuck.
Yeah, you probably should, Decimal.
Sorry, I'm smoking weed this morning. I'm a little retarded. So
I have no idea what your entry price is, but it's probably as high as it's going to go. Or at least, at a minimum, half on a double. Yeah, I don't know your entry price.
Like for pricing options, it's like everything. How do you do? It's like I'm aware of like black shoals, but like how do you account for like all those just like the fat tail risks?
You don't.
Just
Or
like can blow everything up.
the way Black Scholes does it is basically implied volatility. So you have your delta, your vega, your theta. Those are the three, in my opinion, primary levers. Delta and theta are relatively easy to derive. Vega and then the implied volatility that feeds vega is pretty much where all the excess premium goes.
But then, like, Black Scholes assumes constant volatility, and then
Black Scholes uses volatility as a representation of risk. That's not always the case, but that's the main focus of Black
so it's
Scholes.
like textbook finance tends to just assume like the standard deviation of daily returns is equal to risk.
Is equal to volatility, which is a stand-in for risk.
Yeah, and then so it's like with options, I guess it's like, is it just all like tail risks that just cannot be modeled with like with any level of certainty?
You model it the way you would a portfolio of anything. If you have a pool of 100 different options contracts, you know 2% of them are going to have a tail risk that could materially change your portfolio. You then adjust the valuation of the remaining 98 options to accommodate and pay for the tail risk of the 2 that will fail. You know,
we love you so much.
Yeah, basically. Like, you know in the portfolio some amount are going to fail. You don't know which one, so you protect everything the way you would an insurance company might. And the other problem with Black Scholes is that it assumes European options. So what makes European options distinct from American options is that European options can only be exercised at maturity.
So it's
American
time instead of continuous time.
So one way to avoid that is to basically take the same option contract and simulate different days to expiration, measured as a decimal against the year, to try and figure out the curve. It doesn't always work, but it's a close enough approximation when you're trying to model the price of an option over time. A better way to do it would be using something like a binomial option pricing model, but that's very compute intensive, and it's not really something I've been able to do in real time. So I only calculate that.
Pricing model, a giant probability tree.
Yes, but you can infer that probability based on the existing option pricing. So in its simplest form, you want to know the price. You want to know for each step, in this case, options expiration, at what price the market thinks has a 50% chance of being hit going up, and a price that the market thinks has a chance of being 50% hit going down. And then from that, you can infer the random walk between, and then the distribution of outcomes, the average of which, or the mean of which, you can then use to derive the expected output price.
I see. Do you work in this sector?
No. I used to. Used to be at a high frequency trading firm, and then Flash Boys got published. So as the head of the desk spun off and started his own fund, took the senior guys with him, left the junior guys behind. So, I was a casualty of that.
So you're based in Chicago, New York?
New York.
I've been trying to. I have an engineering background. Been trying to been trying to learn mathematical finance, and it's such a trip.
GPT-4. You think I'm joking? Try it.
Well, I don't have access to GPT-4.
Then do 3.5. Anyone can get access to that API. And financial engineering is well enough understood that GPT 3.5 should be capable of using it.
Financial engineering is such a trip, especially once you get into synthetics.
Financial engineering is just a way to model picking up pennies in front of a steamroller. It's basically what Theta Gang does, but with more math because of the moving parts involved.
I find like a lot of finance, like especially once you get into structured finance, derivatives, and synthetics, it's very creative what
You're not wrong.
asset managers can invent.
Well, it's not about that. It's different investors have different risk profiles and return requirements.
I mean, I'm aware of the theory behind it. And so it's like you have like exogenously determined risk preferences, and then so it's like the financial sector needs to create a way to maximize risk at all different levels, maximize return at all different levels of accepted risk. And because you have a ton of economic agents, that's going to imply a ton of different kinds of securities in order to complete the market. That's still like
I
it's still
wouldn't say
creative.
that.
It's still interesting to see what like the asset managers and the sell side can create.
Sure. No gains without risk. Can you rephrase, please?
This is Markowitz, right?
It wasn't the flash crash that caused the fund to be spun off. It was the new regulation by French banking regulators which made proprietary high-frequency trading illegal at French
Was that
banks.
MiFID?
And because that was made illegal, the high-frequency desk on which I worked at the time was shut down. The head of the desk, the guy in charge, ultimately spun off and created his own fund, and in doing so hired the senior guys to come with him. The junior guys, of which I was one, were left behind. So kind of a shitty move, but at the same time I understand the reasoning. I have no idea where here is for you, but in the US and Germany, there's a good chance it's still legal. To be fair, high-frequency trading in France is still legal, just commercial banks can't do it. That's the important distinction.
Most of the HFTs are like basically are market makers, and they just trade those bid-ask spreads.
Eager Beaver, implied volatility already shot up in like the first 5 minutes of market for Google, so I stood aside on that trade. I definitely don't like that play at all. Because remember, in options, you have basically 3 levers, right? Delta, Vega, and Theta. Theta is always decreasing, is always eating away at your position with respect to time. So if you're long an options contract, you need the increase of the price of the option relative to delta and the increase in the price of the option relative to Vega to overcome the money you're spending with theta. So if IV is low and delta is high and the price of the underlying moves up quickly before the IV does, I then have both the Vega and the delta working in my favor against theta. But now, for Google specifically, because IV is elevated, I now need delta to overcome both Vega and theta, and that's much harder than delta and Vega versus theta. Does that make sense? Basically, yeah. The easiest way to calculate IV, Julie 99, I guess, is to take the current bid-ask of the options price and then run it backwards through the Black-Scholes model, so you can come up with what's known as a vol surface for every strike and expiration. I do not know if they're recorded, Elgato, but you could probably check the WallStreetBets YouTube channel to find previous talks. And yeah, admittedly, I should probably host another Q&A or AMA at some point, because I'm sure these questions will come up again. Okay, we can make arrangements for that. Probably put it up on half on a double. I wonder if there's a way to store a media player on that site. There has to be. Well, Zima, if you go to halfonadouble.com, you'll find the plays that I've posted for the last however long it's been since I started the website. including some of the degenerate gambling plays where they appear. Okay, so I'll need to figure out how to like set up the recording so that it's also hosted on that website after the recording is made, and also generate and format a transcript. So that's probably something I can feed into GPT-4. Right.
Looks like strangle buying right off the open on the S&P 500 complex. It's almost an equal amount of puts and calls bought in delta terms.
Can someone please put the website in the chat for Red Pool? I'm not near a keyboard at the moment. Thank you, Azul. Anyone here well versed in solar technologies? Is there any real meaningful difference between using string inverters versus the N-phase microinverter model? Because my understanding is that an individual panel is made up of 3 to 6 parallel strings of solar cells. So hypothetically, different sections can be shaded and it will still produce power. So the microinverter argument for N-phase, at least from my perspective, breaks down because within a solar panel for which you have one inverter, you have some number of cells in series. And then each string of cells in series is then run in parallel to generate whatever potential difference voltage you'd need. Understood. Thanks, Off-Grid. So for anyone looking at ENPH, I would probably stand aside until the gamma max and delta neutral numbers are updated for the week, if only because all this extra buying very likely is based on, what's it called? Irrational pricing.
Yeah, it was a Piper upgrade to, I think, 255 was their PT that they listed, but I'm seeing some end phase puts coming in, so I'm hesitant to buy at these ranges.
Well, I need to see where the open interest lands.
Box A is up 0.5% on the day, even though the trial's supposed to start soon. Seems like a good time to try and short them.
Who was that?
Fox News.
Eager Beaver, I don't always exit half on the first day. Sometimes it takes up to a week. But broadly speaking, I risk a small enough amount of money on each play that I actually enter that I can afford some percent of them to go to zero. I can't emphasize this enough, eager beaver. I vary when in my own trading. I very intentionally risk no more than 1% per trade. So I have no idea what 1% represents to you, but the sooner you can get there where 1% represents 2 contracts, the better off you will be. That way you have enough to sell half on a double. Otherwise it gets complicated trying to like convert a long option position into some sort of spread. Well, there's a reason why I've been around here longer than other blue chip. Don't blow up. My portfolio don't go boom. And frankly, I'm of the opinion we need more due diligence and plays on WallStreetBets instead of memes. I suppose. Yeah, it'd be kind of fun if you could turn memes into NFTs and trade them back and forth, but to what end? Or maybe I sell NFTs to half on a double, so the NFT holders get the plays 1 hour before everyone else. I mean, it won't make a difference. Both times are before market open. That might be a fun way to... so no gains without risk. My concern with the banking industry at the moment is the unrealized losses, basically the assets they're diamond handing, are on the order of $600 billion. And that's assuming no hedging. So in reality, maybe $300 billion. Part of what led to SVB's collapse is that the withdrawals against the deposits forced them to realize those losses in order to raise capital to fulfill the depositors. So what I'm looking for is for the next bank to be forced to realize their losses and sell the underwater positions to raise capital. Whether or not that'll actually happen is to be seen, but that's basically what happened with Bear Stearns and Lehman Brothers back in the day. Again, my opinion, but... Yeah, I've seen all those reports about exposure based on 10K reports, but the problem is the 10K reports don't reveal the hedges that were used against those positions. So yeah, I don't know to what extent the US would accept an IMF or any currency that prevents or limits their ability to enforce sanctions. And one of the advantages of the US-driven interbank system is that sanctions are very heavily enforced. All right, I think we've approached enough degeneracy for the morning, so happy trading. Try not to lose too much money, and I will see you all probably on Wednesday.
Beer Hardy.
the heck happened, everyone? I forgot I was here.
Trump.
Did you say Trump?
Yes, sir. What's going on, Jay Bourbon? 69.
Good diamond. Good diamond hands. Diamond handing.
Yeah, you know me over here just fucking diamond handing these fucking puts to oblivion like a fucking moron.
Fucking diamond handing QQQ calls and was just getting shit on. So I paper handed at a loss. Try to do a
shit,
quick
it'd be
day
like
trade.
Yep. I got some swing trades, so I got some of them are probably gonna expire worthless on the 21st, but then I got one on 428 and one on my GB put is like 512, so I'm good on that one.
Yeah, this is why you don't do 0 day to expire because you get crushed if you're wrong.
Fuck that, dude.
I'm glad I recovered that. I was down like $3,000 this morning.
Yeah, it's good as long as you got out of there, you're straight, dude. Fuck.
Yeah, I lost a couple hundred, but not thousands.
Yeah, that ain't shit. Yeah, that ain't shit. You'll be fine.
Yeah, I mean, luckily I have MT shares that are just fucking ripping. I wish I still had those options, dude. I would be up like another freaking 3x.
Oh yeah. What is net doing? Let's see. I sold my net. His net was running.
Net is one that you like buy when it's cheap as hell.
Oh yeah, it already ran up. Oh, I should have held those fucking calls this week. Fuck, I'm stupid.
Real. Stop.
I was putting money elsewhere. Let's fucking de-whack doing on what? Fucking crashing some more? Oh yeah, I was gonna do puts on that. Digital World Acquisition. It sounds like a company from like a Will Ferrell movie. Digital World Acquisition.
Yes, sir.
Damn, that shit's boring as fuck. I can't do shit with this fucking shit right now. The queues are shitty today too. Fucking hell.
All right. Thank you so much, YouTube and Twitch listeners, for tuning in. I think there's probably not too much discussion left to be had, so I'm gonna end the streams for now. If you'd like to continue listening, check us out on Discord. I'll post a link to the Discord right now in the chat. So there you go. You can join there if you'd like. Yep, should have come up now, and hopefully we'll see you there. Thanks so much for tuning in, and we'll see you all tomorrow.